Happy Sunday, guys. Welcome back to another weekly webinar. Once again, we're going to be going through the markets and do a little bit of back testing for the month of January because we are in a new month. But at the same time, we're going to be congratulating one of our top students that performed very well this month. There were a couple of other people, but one that stood out the most is Mr. Emmanuel Gordon. A little background on him is I used to be his personal trainer back in 2018 or something like that. And, you know, even back in Virginia, he always used to say that, bro, I'm gonna want to learn to trade. So fast forward last year, he reached out, he told me he was ready. And this year, not only has he started the year profitably, he's also getting some payouts on the future side. So we want to congratulate him. Definitely some big strides have been made. And so today I'm going to give him the opportunity to share his screen to talk about his recent payout experience, the trades that he took, along with certain things that you guys could benefit from. Please definitely drop some fire in the chat. Give him some love, congratulate him because this is an amazing feat to see some uh, actual fruits of your labor with trading. Definitely, man. It's your time to shine, bro. You ready to share your screen?
Yes, sir. Yes, sir. Just give me a minute. Let me see. Okay, sure. Let me go to the Zoom. Mm.
They showing you mad love in the chat, Brody. Rodrigo, welcome, bro. Welcome.
Okay. Can you see my screen now?
Yes, sir. Yes, sir. We can.
Okay. So, I don't know, like, what you want me to show you. Maybe the covering stuff or charts and stuff. Like I said, at some point, I kind of end up like in a couple of loss, that I took.
Hmm.
But at the end of the day, I try to recover them most of the time and being profitable most of the time. Because I feel like for me, at this point, most of the time, like I feel like I get to like entries really quickly instead of be patient and waiting, like, because I know that this move is gonna happen, but sometimes I just get really quickly and stuff anyway. That's the reason why sometimes I end up like in a loss, you know. But yeah,
Awesome. Wow, the trade percentage is high, my brother. 84% trader win. Profit factor 5.59. These are some solid numbers, bro. Total P&L 13K. Let's go. That's beautiful. That's beautiful. So when you first took your trade, it was for the most part you're trading gold, right?
yeah, I trade gold, yeah. I trade gold and silver, but I don't do silver that much because like silver move too fast.
Yeah.
So I don't dig on it. But yeah, I trade gold.
Awesome. All right. So you said typically you use micros,
Yeah.
correct?
Yeah, I use like two contracts all the time for my
Two
trading.
contracts all the time. And you
Yeah.
feel like this is the most comfortable for you.
Yeah, like I said, when I pass my account, because like I don't know what's her name, Alice, because me and Alice used to trade sometimes, because she's fast at trading.
Hmm.
But I don't go beyond two contracts, like whatever the loss is gonna be. I never trade more than two contracts since I started trading. I always trade two contracts and stuff, whether it's a profit or loss, but I always trade two contracts. So like whatever thing I got, But see, because like since last Friday, because like I said, the month of January, I've not traded that much. So I started trading like the Friday I passed both of my accounts. I'll show you the other account later. So yeah, so since I started trading now, I'll be consistent with both of my accounts. Like when I pass like, two of my, accounting stuff, But so like I said, like the thing that pretty much gets me into like trading now, like I don't trade the 9:30, session anymore. I trade like it's like I still trade New York or Asian like the Asian session and stuff, but I don't trade like when the moment markets open at 8:30, like 8:30 and stuff, then 9:30 I'm looking for a move. Because most of the time that's what like they usually get me most of the time because like the market because I don't know like any direction where the market is going, sometimes that there'll be like maybe like a buy, opportunity. Sometimes they just drop back, and just want to sell. So sometimes I just have to wait like, around 10, 11. Then I look for my move. Like, okay, this is how the direction the market is going to go. I see like a pullback and stuff, then I enter and stuff anyway. That's how I've been consistent for the past couple of weeks and stuff.
Beautiful, beautiful. Now, do you have your trade calendar where we could click, where you could click and show us from the day to day? All right, so it's a new month. You're gonna have to click back.
Yeah, so this is
All
my trade.
right, so this
Yeah.
is the basis of your
Yeah.
month, your performance. Okay. Pretty strong trades, pretty strong trades. Nice, nice, nice. Scroll up a little bit. Oh, I see, I see. Mind you, man, this is a good layout. Shout out to Top Step. It shows the duration of the trades. I see that you last about, between a minute to 15 minutes of a trade is solid. It looks
Yeah,
like you're going for at least a hundred to 300 to even $500 in profit.
yeah.
You
Yeah.
keep it simple.
Like I said, I'm not like you stage because like most of the time when I stay trade for a very long time, I end up in a loss. So whatever, because like I said, I use two contracts. So most of the time when I get to like 100 or maybe 600 and something, I just take, partial and just leave the one contract to rest, to run and just move like, to break even. So whatever it comes back, I'm still in profit.
Nice. Beautiful. So tell me a little bit about your 5K day here.
So my 5K, I end up in a 12 12 trades.
Mm-hmm.
You understand? Because like I said, I suspected like goals for them to sell out, but like I said, sometimes I enter too early in my trades, sometimes come all the way back, where you like, but because you always said sometimes where you're not comfortable to trade, even sometimes it might be a win, just get out,
Mm-hmm.
and see like for another entry. So like that's the reason why. So like when I get to the trades, but on Friday, I because like I realized because even like me and is it Brown? What was it like? Is Brown and something in the on Discord? Brown.
Uh, I'm not sure who that is.
Yeah, if you go on Discord, we were talking like Friday
Oh, you
morning.
talking about de jour?
Yeah, we're talking about like the markets, like the thing that's gonna buy. But understand like with gold because like I look if you go to like the trading view, if you look at like the 1 week, candle.
Mm-hmm.
Yeah, if you look at the 1 week candle, like that was different for me, like the way I was looking at it. Like, hold on, let me
Can you
just
guys see his screen, by the way?
Yes.
Okay, good.
okay.
Good.
Let me see if I can able to go to like trading view. Trading
Trading
view.
views on your left.
Okay. So if you look at gold, now, so if you look at gold, you look at the 1 week, sorry, I'm finding difficulty with this Zoom thing.
Chart
Uh,
looks very clean, by the way.
yeah.
Very simple. I love it.
Okay. Now, if you look at the weekly, uh, is there? Okay, now if you look at the candle of the weekly and the weekly and stuff, it was different for me, like the way I was looking at it. You understand? Because like when they pulled back, the candle was on this side.
Mm-hmm.
You understand? But I realized that there's so much room for them, for them to fill up this candle. I'm like, okay, they might pull back a little bit and started selling. So that's why, like, because like, I was looking at the daily because the daily make more sense because you know that okay, the daily on this side, the first pullback here already makes sense because they already met up to like a demand here. Then I went to the weekly. When I look at the weekly here, I see like, oh, there's so much room for them, to come back. And up till now, I don't think gold has done selling yet because there's still room for them to come to this demand,
Mm-hmm.
them to come down, before we start expecting some buying, coming in. So like that's why even for like this week, I'm still gonna look for like selling, you know, because that's pretty much like I said, like there's so much room for them, to sell before they started buying and stuff anyway. So like that's how I've been trading, But like my trading experience before has been like me looking at the 30 minutes and the 4 hour demand before I trade. But since I started looking at the 5 minutes and 3 minutes, because I use like 3 minutes for me to enter a trade. That has been my functionality now.
That's the time frame you use.
Yeah, I use like 3 minutes for confirmation now. Yeah.
Okay. Very nice, bro. Very nice. Thank you so much. That was insightful. Congratulations on your payout. and may you continue to remain consistent, even though sometimes things might not go as planned, but know that you have a blueprint. Stick to the blueprint. All right. Did you guys enjoy his breakdown?
Yes.
Do you guys have any questions for him? Awesome, awesome, bro. Congratulations, man. You enjoy the fruits of your labor. I'll be waiting for my 10%.
It's coming. It's coming. It's coming. It's coming.
Okay, okay.
Just three more days. Okay, I'm gonna have another payout, but then you're gonna have your 10%.
Appreciate it. Appreciate it.
All right.
All right, all right. So guys, I hope you appreciated this segment. From time to time, I want to make sure that not only do we congratulate some of you guys who are seeing some big breakouts out of your trading, but we want to learn from one another because I'm not the only person here who's experiencing success, or I'm also not the only person who could teach something within the group. All right. So the market just opened. This is why I wanted to make sure that we started the webinar early today. We had a crazy, crazy experience out of gold this past month. Now, there are some things that I did want to point out. Last time we did a webinar Thursday, honestly, I got a little trigger shy. And when price did reach this area, I failed to calculate a risk plan for a trade like this, especially now that the market literally, when you trade on a personal account, you have to really watch out. Normally, 400 pips is not something that any of us are used to, but the signs were there. Um, this retracement had the world shook, but this is just a macro retracement compared to the usual ways markets uh, retrace, but it's not uncommon for gold. What I mean by that is, on average, when the market rallies a lot for gold, they typically come back within range. And usually, once they create the top, you get some buy side liquidity, it's always followed
Ivana,
by a break and retest. So I can show you guys 4 times recently where the market gave a nice rally to the upside, and then when it needed to come back within range, they gave a deep break and retest. This was obviously the most recent one. This is on December 26th, December
Well,
28th.
hold on. I don't think like anyone is seeing your screen right now.
Okay, let me stop sharing and share again. Are we all good?
Yeah, now we're good.
All right, so let's start over. What happened was not uncommon with gold. We typically see a deep correction when price rallies a lot with gold. And we could look through a few times since October when this has happened. During the middle of October, when we start seeing a crazy rally from gold, when price needed to come back within range, they came back to retest the 4-hour high, couldn't break it. And by Asia, London, they brought it back inside. One thing about my trading is I love to see things that happened before repeat because it makes me a lot more prepared to understand what I can expect. This was October 20th, coming back to retest 4-hour highs. We notice once price makes it to the last recent high, they like to reverse it this way. And once they do, they correct heavy. This was a 7 to 8% correction. You see it right here. This is where I'm getting the 8%. You see how it says 330, negative 7.75%. This is what I'm talking about. Okay. I believe this thing pulled back 3,000 pips at the time within 24 hours. Within 24 hours. Um, 10 p.m. was Asia. By the time it was 6 p.m. the next day, we're looking at price coming back in. So the reason why I'm emphasizing this is we need to have certain expectations when we're like, man, I want to hold trades longer. I really could have caught this trade. I saw it coming, but I just couldn't hold. Well, it's two reasons why we usually experience something like this. Number one, let me make this a lot more. Okay. Reason number one is maybe the risk we had in mind made us feel a little uncomfortable versus how much we have to put the stop loss away to catch the trade and sit comfortably in it. Number two is the time it will take to play out. Sometimes we're not patient enough to let it play out because we're like, we don't want to be responsible looking at a trade that was in profit and then something happens and we lose it. So this is why, like, when we see reversals like these, we have to know that those type of reversals usually last a lot longer than just an hour. You have to expect it. But if you are to get in a trade like this, you at least have to give it minimum 12 hours to reverse back within range. So this happened. Everybody was shocked. We saw this again in the middle of November. Price started rallying, rallying, rallying. Then they gave us a reversal break and retest. And it's kind of funny to me that it all happened pretty much the same way. A deep break of structure on a Thursday, followed by a retest Thursday night Asia, and then this they sell off until morning and even the afternoon. Let's just say 2 sessions. Well, three. Asia, New York, Asia, London, New York. So the next Asia, London, New York, once you get in a trade like that for the midweek reversal back within range, you can expect from Asia until the end of New York, or at least 2 p.m. New York, a setup like this is to be expected. So it wasn't surprising that we saw price rally hard and then came back within range because we've seen it happen before. The third time Price gave us an example like this, we saw it happen December 26th. Start seeing rally, 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 a whole bunch of rallies, and then a deep break of structure, pull back, retest, sell off. And the sell off finished by the afternoon in New York.
Bro, do you mind open your screen like a little bigger, please?
Hold on. Is this good? Better?
Yeah, we good.
Okay. All right. So we open it up today with continuations. Um, we have a partial government shutdown, but as this market has just opened, it's been about what 15 minutes now. My expectation over the next 12 to 24 hours is that price will go down to touch 4,500. I see, you know how we were complaining about the gaps needed to be filled? This whole move has been filling every damn gap that we're left behind. So when I go to the 4 hour and the daily, and I'm looking at this structure here, I can see that there's a lot of reasons why this market would actually come down to retest this area. We can tell it looks like a pretty good base. It's a good psychological level. I can see us heading down into the 4,500s. Let me check the chat here. That's a landslide. Oh God, that is. Shit. It's huge. Huge. So um had I peeped that, I would have had more confidence to get in that sell and held for like 24 hours. But I was wondering, man, like that retracement looked like they could have just make it here and start buying back. So I was a little hesitant. So I have to admit that. However, in New York, we saw that price came up to retest, break and retest, caught a little bit of it on the downside. We have to also remember a break and retest in the middle of the session is at least an hour of work. You can get busy with a trade like that. Break and retest on a 1 hour time frame. This was a pretty good setup. They had a lot more volume to continue to the downside. This was a good trade. All right. So I don't see buys yet. I do see 4,600, 4,500 being areas where we are looking to reach. Now, it is definitely some crazy times. It's abnormal that the market is moving 2,000 pips in one session, but hey, more money for us, right? Only thing is, we have to get comfortable decreasing the position size. All right. I'm not going to lie. It's humbling, but a 0.03, 0.04 on an account that has a good 2 to 3K, yo, you have to do what you got to do. Even with an account, a personal account with $1,000 right now, you got to be okay with just putting a 0.001, or else you're gonna feel really, really hesitant to get in any trades that you now have to put 400 pip stop loss, 250 pip stop loss, just to catch a trade that might give you 1,000, 1,700, 800, 1,800 pips. It sounds wild, but this is the times we're living in. This is what gold is given, and we gotta catch them. Okay, so some of these adjustments are what I've noticed we have to make sure we do to be able to keep up with the current conditions of gold's markets. All right, now let me make sure I write. Yep, if you got a small personal account, 0 to 0.06, depending on your account size, it's okay to start looking at um, lowering your risk just to catch the trade. All right. Because right now, even with a 300 pip stop loss that you have to put above the order block, and a funded 200K, what lot size should I use? That's a good question. How much risk are you using per usual per trade? This is where it starts. Okay. So now 0.25%. What lot size was that? What lot sizes were you using then? So let's say you were risking, okay, 0.2. Perfect. So now your usual stop loss, how many pips did you use in the past? 50, 100? Okay, cool. So now if you're using $5 and you're risking 50 pips, that means you're risking about $250 to $500 per trade, right? Now, if we're using the same amount of money as risk, and you now have to put your stop loss 300 pips away, it's the same math. But let me show you how you do that. If you're risking $250 divided by 300 pips now, you now have to use 0.06, 0.07, 0.08. Okay? Yeah, you're welcome. You have to, because now if you're risking $500 per trade and now you pull your stop loss and you're like, damn, this is sexy breaking retest, but fuck, 520 pips. Damn. But damn, hey, in about an hour or two, or even, if I hold until the end of the session, for example, if you're going for a 1 to 2, that risk to reward won't be stupid. You know what I mean? It's still gonna be rewarding. But even with a point 0.8, let's use a point 0.8. Even with a point 0.8, you catch 1,000 pips, that's still $800. Just adjust the conditions and play within the structure of it. Just decrease your risk. All right. You'll still be able to catch 2,000 pips, as crazy as that sounds, but you're still risking around the same percentage. Does that make sense, everyone, including Rodrigo? Yes, sir. All right. I think that's very important for everybody who's listening to this conversation right now. We have to downsize just to still be able to take those trades. Um, I was getting trigger shot putting in $3. I'm like, oh, hey, pullback kind of weird, bro. So I had to sit down with myself over the weekend too. I'm like, hey, bro, yeah, man. 0.60, 0.70, 0.80. Whatever you gotta do if you gotta risk $250, $500 per trade, that's how you're gonna have to do it. You know? These conversations are very important to stay in the game. Cause let's be honest, gold is has ruined the amount of pips that's moving um on a day-to-day basis. It's not gonna just shorten back up into like 50 pips. They done changed the game on us. So we have to figure out how to adjust with the risk. Okay. Um, don't try multiple attempts if you don't have a lot of capital. If you're in a phase one, phase two, if you plan on risking $500 per trade, man, you got to divide the attempts. If you're somebody who takes more than 2 attempts per day, you're gonna have to divide that by three. So now you got to be risking 150, $160 per trade if you plan on getting back in for scalps, you know? But now if you're risking 106, let's say $150 per trade, and the stop loss has to be 350 pips with a trade that has a good structure, you see what you have to use? 0.40, which is, oh, on a calculator, that's 40 cents, but lot size wise, that's 0.04. You'll still get the same outcome risk wise, but that's not going to stop you from taking a trade. Risking at 150, price goes 1,500 pips. Hey, you still out here making $600, $700, so you can finally get to your phases and getting the payout. That's what matters the most. I feel like Emmanuel, you was about to say something, bro.
Yeah, I was thinking for you to go to like the weekly candle because sometimes when you talk about because much focus on like the 4 hour, time frame,
Yeah,
sometimes the candle might tell you like exactly like where you like it's because like even for me, I could have hold on to my trade like like a lot of time, but this weekend, yesterday I was looking at the weekly candle. I'm like, this trade I could have hold on to for a very long time anyway.
yeah,
The weekly candle.
yeah. Okay, definitely. Yeah, as we're looking at the weekly time frame too, we can see the area of interest is sitting right at 4,600. Now, a lot of people are screaming bloody murder about gold. They're still planning on seeing gold touch 6,000 by spring. So this pullback is very much needed because when they were touching 5,600, I'm like, damn, yo, shit, damn. I guess next week y'all finna touch 6,000. Like, what the heck's going on? But I had a feeling the pullback was gonna happen. So now that we have the pullback, I think towards the end of February, mid-February, we might start to see structure respecting demand enough to make to start rallying. Okay. Now let me tell y'all a little something. For us to know our pairs, we have to see how it moves, and we back tested enough to understand how gold likes to um, rally back to the upside. When gold wants to rally to the upside, you'll notice many times. it's usually towards the end of the month after they done retested the highs twice, then they come back to the area of interest one last time before they start rallying. That's something I want to keep in mind because many times towards the end of the year, I'm like, man, I'm trying to hold swings so I can, you know, let this thing rock and it'll start rallying, but then it'll lose volume. I'm like, damn, yo, I was in all this good profit. The heck? But it was until price would retest um the structure towards the end of the month that they would start to buy where I initially thought it was going to go. And they always start out failure swing, come back to the order block, failure swing, come back to order block, then they run. Sometimes I would expect them to just beep bop. Nah, they don't usually move like that. So that's why now I'm learning to be more patient towards like the end of the month if I want to really be part of a good rally from gold. Okay. Notice September 26th, September 30th, boom, break retest, come back into the zone by the first week of the next month or the end of the month. That's when price starts to rally, um, even though you want it to be a part of the swing. All right, look at this. End of October, end of September, end of October, and end of December. End of December, first week of January. You see it, guys? So if I'm expecting a rally, some people have been trying to catch the bottom just so they could be like, man, at this point, I just want to catch it from you. You're going to have a hard time. So we have up until the end of the month, probably, um, to see about price creating a low before they really rally back to the upside as we're expecting it. We might see price, range up, bounce again, push back up, come back, push back up and stuff, right? But if you're really looking to swing trade it back to, touching 53,000 or something like that, just be patient enough to wait for them to work the floor. That's something I've noticed about gold. Um, it usually does that. Usually does that a lot. You'll notice even in August, I remember I'm like looking forward to be part of like a long swing from gold. July was like, where is it? July price started buying. And again, they still came back. And I'm like, yo, what the heck? When you don't see enough data, you're not gonna understand certain behaviors. But when I tell you, I think that's probably one of the reasons why I felt so worn out. I keep holding on to positions that keep coming back. I'm like, bruh, I know you're gonna swing. When are you gonna do it? So the whole month of July last year, I'll catch really good trades. And even when we got to this point right here, me thinking price is gonna break structure, clear liquidity, and then they come right back until the end of July, beginning of the new month, then they rally. So I'm like, oh, okay, interesting. I'll keep a note of that in the back of my mind. Does that make sense, guys? So if you're looking for long-term swings with gold, start thinking about the end of certain month periods going into the new month. Kind of like right now, end of January, start of a new month. We pay attention to these nuances. Okay. All right. Let's move on to other asset classes that we all still trade. US 30, aka YM. We are back into this 4 hour demand zone that's been a bit choppy, but it is the beginning of a new month. I do believe this won't stay choppy for long. We will be able to see um, some rallies. Let me go ahead and check the SDAO real quick. How is it doing all the way over here? Okay. So we just recently retested an area right here, this lower eye right here. This tells me it's a very good chance that we might see price continue. Uh, oh, the VIX was retested not too long ago as well. Looks like we are due to make another rally to the downside, which you know is the VIX and the SDAO is the opposite of US 30. So I can definitely see this area of demand being a good key zone for buys. All right. So last week we saw a potential buy for US 30 and such. And then the rally started. Let me extend this real quick. I believe it was right here. Yep. And then by London, we started seeing price quietly move to the upside. This is NFP week as well. So I wouldn't be surprised if, towards Thursday, we start to see more movement. I believe we also have a holiday this week, right? Or am I tripping?
Next week.
Oh, it's next week. Okay, yeah. Thank you. Y'all know I'm bad with holidays. But Monday we have ISM manufacturing news, nothing too crazy. We do have jolts. All right, the typical. We have we have monetary policy for the Great Britain pound, also with the euro. For those who trade GU and EU, there's definitely going to be some action there on Thursday. Um, Let me see what GU is looking like. But I do go to GU, definitely pay attention to this area of demand um, for US 30. Although I feel like we could see price sell a little bit further into this area, but we shall see. We shall see. It all depends on how price respects this zone right here. Silver, silver for the average investor, if you had missed out on this rally, now we know silver is dead serious. We definitely want to buy down here at price of 76. We're talking long-term investment. Like this is a good area to buy at if you plan on investing in silver. This is also a good zone to buy at, on a intraday level. We just gotta um if I were to take a trade for silver buys, I'd just be putting my stop loss below Friday's low.
Yeah, because if you look at silver like weekly, candle, like they pretty much touch already, like
Right.
yeah. So now would be like a good buy for them anyway.
Absolutely. Sweet. That thing looks sweet. Coming back into December, end of December, first week of December's lows. It's beautiful.
Can you take a look at NAS?
Yeah, we're about to go into NAS. All right, let's start off with a daily. Okay, NAS has retraced into an area of demand. It also seems to be a fair value gap right here. All right, guys. Let me drop down into the M15. Nas definitely looks like a good buy opportunity for those who want to get in early. Buy at least London tonight and New York. If price keeps working this floor, you guys will have enough candles to make you feel even more confident to get in these buys for Nas. I think this is great for those who trade options to get in around 25.3. This is beautiful price action. Psych. No, but there's a gap here, but this floor right here, I'm sure Nas will make good use of it. It's not enough candles yet, but we can tell what the intention is. By New York, I believe we'll see a lot more candles to be able to make a better informed decision on taking any trades. But if you guys do want to get in early, I don't see why not. I don't see why not. Stop loss will have to be obviously below this low. And a retracement would be nice as well. Retracement would be nice. All right, let me take a look at GU. The way GU is moving, it's pretty much looking kind of like how gold was. Man, I've had these lines forever. The way price just rejected off of the highs, this week we might see GU retrace to make a lower high, but sell off even more come around Thursday when interest rates or monetary policy for the Great Britain pound gets called. I think we're going to see price sell off back into the 1.34 areas. Somebody says silver is cooking. Mm-hmm. Yeah, buddy. All right, let's check back with gold, see how gold is doing. Okay. Hmm. I'm looking forward to see what New York looks like tomorrow for gold. And I definitely want to see if price is gonna retest those Friday highs and sell back down. Because that's how my bias is looking like right now. Because 45, ain't no way we not gonna touch 4,600 and such. Yep. Okay. So far, so good. Definitely a good time for scalps for silver. I'm sure you guys took some. I'm sure somebody's in this trade right now. Somebody said, "Now you speaking my language." Okay, silver's cooking. If close above gap, could see 101.5 on silver. Yep, for sure. Um, for sure. Yeah, I wouldn't. I wouldn't look too far up here. That's one of the things we got to be careful about. We always got to pay attention to how price reacts from last Friday's highs when the market opens. In case we reach those highs, we're in profit, and then all of a sudden it loses volume and keeps selling off a little bit more. I see Zillion said the same thing. I see more sells for gold and silver. Yeah, I think we'll see a little bit more downside for sure. Matt said he's already done for the day. Let's get it. Yeah, I think we're just retracing up from Friday's highs to reach Friday's highs and then probably sell back down a little bit more. A little bit more. Okay. So overall, we talked about risk management adjustments for trading the indices, not just in the indices, gold and silver, because nowadays they're moving more distant. They're moving they're moving a lot more further. So like a 300, 500 pip move nowadays is nothing. It's crazy. We finished last year looking at 400 pip moves. Now 2000 pip moves is not out of the ordinary. So just don't be greedy, guys. Sometimes if you feel like you need to jump out of the trade, do so. Don't allow the losses to get too bad. There's a lot more opportunities than ever before. All right. I think that's about it for me. It's not much more to talk about. We've broken down silver. We said silver more than likely will retest Friday's highs and play within this range. We also said gold is more than likely to come back and retest. And we're going to find that out if that's true or not in the next session for London and also New York. So let's definitely stay locked in and not do too many silly things to keep us away from our goals. All right, guys. And with that, we're going to call it a good webinar. Who's ready to have a good trading week? I know I am. All right. You guys have a great rest of your evening. We will connect throughout the week per usual. All right, guys?
Thanks, Ron.
No problem.